Good afternoon and welcome to Bull Market Talk Show. This is your host, Rian Opson, and we're doing South Africa's GDP today, actually dismal GDP figures today. Estimation had it at 2.5%. That will be the quarter-to-quarter GDP, which is a very important indicator. And it came out actually at 1.2% and missed actually the estimations with 1.3%. And the current GDP figures of South Africa did not actually include the whole entire mess in Joburg and in KZN. And believe me, that number will still come out in quarter three, and that will be basically a disaster. I will just be back with some more information regarding the South African GDP.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Welcome back to Bull Market Talk Show. This is your host, Rian Opson, and we're doing South Africa's GDP today. Please don't forget to subscribe for my YouTube page, and then also please drop your comments, like, and don't forget to press on the link below, register a free markets.com account, fund it with $250, and get your free classes. Now, the GDP figures came out very, very disappointing. Forecasters had it at 2.5%. It came out in the green with 1.2%. But there is some serious issues when it comes to the South African GDP, or basically the South African economy. Just to share your screen with me, if you can see that the GDP figures for South Africa, that was the forecast, which was actually at 2.5%, and it came out actually at 1.2%, which is actually a miss of a 1.3% in the GDP figures. If we look at the rand, is actually where it actually currently trading, just to make the chart bigger for you. The rand actually was sitting earlier basically on a support line there at around about the 14.20 mark, and it's actually trading now at 14.31. So those of you who actually went in with a buy on the US dollar against the rand, you would have actually cashed in quite well now. And I think this number with the South African GDP, that will actually push up the rand, I would say actually push up the dollar further up against the rand, because also if you look at the rand actually, and if you look at the dollar is actually performing quite well currently based on that bond yields that is actually moving out of proportion now, currently sitting on a 10-year at about 1.3%. So for the rand, it will actually get a beating. As it look, it will actually get a beating today. Let's actually go deeper into the statistics of South Africa, where you look at the GDP figures. Actually, transportation and communication was the big driver of a 6.9%. Agriculture second with a 6.2%. Personal finance, trade, mining, gas, electricity, gas, and water. Finance were getting a beating. Manufacturing, this is actually a massive concern here. Manufacturing actually down with a 0.8%. Government spending, and then the other one is also the construction. Construction is down with a negative 1.4%, which is definitely not good for the South African economy. Once we need that big construction jobs actually it shows strength in the economy. Once your construction sector is not doing well, and that is actually where you can see problems are coming for South Africa. If you look at the exports, was also the big driver for the GDP. The gross fixed capital, household spending were up with a 0.5%, and that is where also the imports come in at the 0.4%. So that is where the GDP comes in at 1.2%. As they say, actually the government spending didn't do so well, and that actually also dragged down actually the economy. But I would not say much, because I believe in a free market. Free market is supposed to actually push the economy further up. So this figures does not actually include the whole debacle that actually happened in KZN and in Johannesburg. So that still comes in the third quarter of a GDP. I thought, obviously, that South Africa will actually read a 2.5% or at least a 2% on the GDP, but that was not the case at all. For the economy to grow so slow, it's not good for the job market, as the unemployment rate is very high at 34%, and I honestly doubt that a 1% growth in GDP quarter to quarter will definitely not make a dent in the unemployment figures for South Africa. It's really terrible figures, although it's in the green, but it misestimates actually with a huge with a huge margin. Actually, it looks like NFP last Friday. Now, just also to actually talk further on the GDP in South Africa. The thing is that it dipped actually very quickly. You had the first quarter of 1%, and now you have the second quarter at 1.2%, where you get other parts of the world where at least there is a bit of growth that goes on, with economies growing at 6% or so. With the emerging economies South Africa, you would at least get the GDP figures quite high up, because we're supposed to do the manufacturing, send it away, because there is actually a choke, I would say a bottleneck in the supply in the world. And South Africa is basically sitting on the sideline, where our manufacturing sector is supposed to push into the global economy, but our manufacturing sector shows actually a negative growth with a negative 0.2%. So this is really not good for South Africa, where we are supposed to actually be the people who's actually producing the chips that is actually a shortage in South Africa, or other parts that the world are needing. But yeah, nothing is actually going on, and there is actually a supply strain in the world, and South Africa has a negative manufacturing data. That is not good actually at all. Now, on the other news, also there was news that come out of Australia. The Australian dollar is actually getting a beating. Australian dollar is actually going down. That has all to do with the Reserve Bank of Australia that actually pushed out their tapering. They actually looking at more in February 2020, where they will start to rethink on tapering. So they actually pushed that out, and they will actually push the economy with an additional QE or stimulus with about 4 billion Australian dollars. So there is no tapering for November. It will actually push out until actually February 2022. On the dollar side, the dollar is actually gaining momentum because the bond yields are actually starting to increase. When bond yields are actually starting to increase, which means investors are actually selling their bonds, and the bond price are going down. So that's why actually investors are selling their bonds, which means people are believing that there is actually a bit of inflation in the United States, obviously with the chip shortages, which I look at it now very closely, because that looks like the trigger for inflation to push up. You must remember, chips actually, or the semiconductors, it actually affect a lot of things, not just the car industry, but if you look at computers, laptops, cell phones, washing machines, all of those things are made with those chips. And if the chips don't get produced, I mean, then you don't have a washing machine, a tablet, a TV, or basically a car. And that is actually choking the global economy currently. And I think that also is a possibility that the shortage of chips might actually push inflation up. And that's why the bond guys are actually selling their bonds, because they think that inflation will be higher. And that's why the bond yields are starting to go up. And that is actually a bit of a concern. So be on the lookout on that bond yields. Bond yields, higher bond yields is definitely not good for the NASDAQ. It's definitely not good for the commodities. As you could see, the last time that I checked, the gold price was actually on 1,811. I thought gold would have actually go down to 113, but it's actually now sitting at 1811. It's definitely not good for commodities, definitely not good for other currencies as well. And that is actually all dollar strength. It's also not good for the oil price and for the NASDAQ. So please be on the lookout for that strong dollar. I think personally, the market is sensing some serious inflation in the United States, and not just in the United States, but globally as well. That is it from my side for today. I hope you guys have a very good day, and then I will see you guys tomorrow at 1 o'clock at the same time.